Now, some people have called me a NIO bear because I have made videos on this stock that weren't quite bullish. But we got to talk about this company again because things are getting quite interesting. The stock is basically at the 52-week low. It is basically at the 62% Fibonacci retracement line. The stock is well below all moving averages for the year. And probably most importantly is the stock is currently trading at a price to sales multiple that is just around 10, which is that Goldilocks zone for a company that has grown revenue over 100% year over year, and good revenue growth should be expected in the future. That price to sales multiple of 10 is what a lot of growth investors look for to get into a stock. So on this video, we need to talk about NIO again. I gotta do an update for you guys because I know that this is a stock, this is a company that a lot of people are invested in and have a lot of interest in this company. Now, before we do that, do not forget about your free stocks by signing up with WEBULL. The link is provided down below. This is an exclusive link that will get you 2 free stocks worth up to $2,300 and $5 for crypto trading. In addition, since it's the holidays, if you refer WEBULL to a friend, you will get an additional 5 free stocks on top of that. It's a great deal. It's a great brokerage. I wouldn't recommend it if I didn't like it. The link is down below. So how did we even get to a point where NIO is trading at around $30 a share? That is more than 50% off of the highs. Peak to trough, this stock is down a ton. And the prior highs for this company were close to $70 a share. The exact high for this stock is $66.99. That's a lot of 6s and a lot of 9s. And just like the stock's prior high, NIO stock has been extremely nasty to its investors. Now, my personal opinion on the matter on why NIO stock has dropped so much off of the high is because of valuations and how crazy things got in the EV sector. The EV sector is still an automobile sector. And even though there is a lot of hype, margins are not that great and it's very hard to produce cars. And that's why historically companies in this space have not had high multiples. They don't trade at crazy price to earnings ratios or price to sales multiples. And that has changed because of the EV movement. There's a lot of excitement in this space and investors are willing to pay more to be invested in this company. It's an ESG play and it's extremely exciting. It's definitely the way of the future, but things got a little bit too out of hand on the prices people were paying for stocks in this sector. This applies to almost every single company in the EV space. If you take a look at Tesla, Tesla is one of the most valuable companies in the world, even though they only take up a fraction of all car sales. So at the end of the day, the space just got a little bit too crazy, valuations got way too frothy, and things came back to reality once we started to see a market correction. But not all stocks in the sector absolutely tanked. The stock that I personally picked and the stock that I am a bull of, Ford, has done very well. The reason why I picked Ford stock was because of the valuation. On a price to sales multiple, this company was trading at a fraction of the price of NIO, Tesla, and the other competitors. In the meantime, they were selling EVs, they were making a lot of moves in that market, and they should have gotten some of that multiple expansion. And now we're kind of seeing it with the stock, even though with the big move that Ford has had, doubling its stock price over the year, it is still very cheap compared to other EV stocks. And maybe it's because it's not a pure play, but there's no doubt in my mind that moving forward, Ford is going to be a huge competitor in the space. And that's why I remain invested in the company, even though my $5,000 position is now sitting at $30,000. And I am moving up my price target just like many analysts in this space. But moving back to NIO, reasons why it's dropped is because valuations were way too frothy. Another reason why it's dropping is because it is primarily a Chinese EV company. The economy in China right now is showing signs that it's going to be slowing down. There's also a lot of competition in the space. There are a lot of Chinese EV companies. In addition to that, there is the threat of delisting. It was just last week when the president of XPeng went on CNBC and said he was very concerned that the company might get delisted because of Chinese regulations. We also got news the other day that there's going to be more competition in the space because Toyota is going to start ramping up its efforts in EVs. But it's not all doom and gloom when it comes to NIO stock. The massive drop actually might be an opportunity to get into the stock or to add to your position if you can still add to it. I would not recommend just continuing to add to NIO because it has dropped. I would definitely recommend keeping it at a certain percentage of your portfolio. If your portfolio allows you to add more NIO, then maybe right now is a good time. Also, we could have a catalyst coming up over the weekend with NIO Day. Now, it's interesting to me that the stock is at lows leading up to that event because typically we see a buy the rumor, sell the news type story. But there is some hope that you see some good news come from NIO Day because the company has said that they plan to launch 3 new products in 2022. So nevertheless, right now is a very interesting time for NIO. Let's hop on over to the computer so that I can show you those levels that I mentioned earlier in this video. If you like this content, hit that subscribe button, ring that bell, and smash that like button as well. What's up, what's up, what's up? Welcome back, welcome back. All right, let's take a look at this stock because, well, things are not looking good. So I think the last time I touched on this company was when it was trading in this channel here and we could see some swings. Well, that channel obviously broke. There was a nice little time of consolidation, but it was pretty volatile with a higher range of around 45 and a lower range of 33. What you're looking at right now is a 1 year, 1 day chart. So this is representing 1 year. Each candle is 1 day. Simple as that. But what's not good is this low of $29.06, and we're currently trading at $30. So we're just 1 point off of the weekly low. So we're just 1 point off of the 52-week low, and that's definitely not good. Also, what's not good is if you take this back even further and you take a look at the 3-year weekly chart. So this is 3 years worth of time, and each candle is 3 weeks here. Well, what happens when we break that low? There's not really much support. We just have this little grouping here, maybe this candle low here at $25. But outside of that, like, this is the move I was talking about in this video and how this whole sector just kind of went rampant and just valuations got out of control. We went from around $4 to $5 a share to $66.99. And that move happened pretty quickly. If we draw a trend line here and we take the look to see how long this move actually took, it's 225 days for a 21,000 or 2,100% return on your money. Massive move. That's when you wanted to be in this company. But long term, I understand this sector, it's EVs are the future. China's going to be one of the biggest EV players. So there's still long-term growth prospects with NIO. But the stock moving that fast has some of that future growth baked into the price, no doubt. But looking at this stock, oh, what line did we want to show you? We wanted to show you that Fibonacci retracement line because with the Fibonacci retracement, we can use some of these levels to try to gauge if we're going to get a bounce. Now, this is rough. This isn't guaranteed, and we'll see what actually happens. But that 62% or 61.8% Fibonacci retracement, which I was talking about, would put the share price at around $28 a share. In addition to that, when we zoom in here and we kind of take a look at this, we are at around $28 a share. I mean, I don't really like this support that much. This grouping here isn't that great, but it's the only short period of consolidation that we had before we legged up even higher. Now, moving back to this thing, and we take a look at the 1 year, 1 day, because that's what we're going to look at the moving averages. Let me get rid of this Fibonacci retracement because the lines get kind of cluttered. It's hard to read. Let me get rid of some of these lines here to make it easier for you as well. These are old lines from when I covered the stock before. Now, I'm not in NIO. I'm not going to be in NIO because I'm in Ford and I don't touch Chinese companies. It's just a rule of mine. I just don't like them. I don't like the Chinese government at all. But the bearish sentiment in the stock is portrayed, and you can easily see this if you take a look at the moving averages. Now, we are below all the major moving averages. This thing is floating here. And some other indicators that you can use here that might actually say that the company could bounce here is the RSI. We're getting into that oversold territory. On the daily right here, we're at a 30. Anything under 30 is oversold, and the last time we touched 30, you can see there was a bounce, but we bounced even lower, or we dropped even lower, and we took out that prior low, and now we're kind of just sitting in this area here where yesterday we had that low at $29.06. I actually want to take a look at this. That was in market hours, so that's actually a true low. If it was in the pre-market or after hours trading with lower volume, I wouldn't hold that as a support as much. But the fact that yesterday we hit that price, we might bounce again at that price. So yeah, I mean, the thing that scares me with this company right now, with this stock, is that heading into NIO Day, we're not seeing that pump, and we don't really have a strong support except for that 62% on the Fibonacci retracement, which would be around $28 a share. But the concern that I have with NIO, I'm not trying to spread any FUD here, is that if we break lower, then we're just in this trend where we're setting lower lows and lower highs. And if $29.06 does not hold, then that's a bearish move, and traders might start getting out of the company, out of this stock. So not the greatest time right now for NIO. But you know, if you're interested in this company, trading at a price to sales multiple for the trailing 12 months at around 10, right now might not be a time to start buying into a position if you're okay investing in a Chinese company. I just wouldn't go all in one trade. I'd never do that. I would go in on multiple trades, dollar cost average, kind of spread out your time so that you're not so vulnerable to this short-term volatility. All right, mi gente, that wraps it up for this video. Join the community by joining the Patreon. It's $5 a month. It gives you access to a private Discord server, to valuation spreadsheets, to meetups, to a whole bunch of stuff for only $5. You cannot beat it. Do not forget about your free stocks on WEBULL. I'll catch you on the next video. It's been real. It's been fun. It's been real fun. And this is We Are Investing, and together we are invincible.